Hello traders, welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Tuesday, December 10th, 2013. Following the holiday rally to the multi-year high at or near 1812. Last week, the S&P broke down below the minor support level at or near 1798 and pulled back to major support down at 1777. 1773 had been a prior multi-year high, and when the S&P initially broke out and traded up to 1800, the market pulled back down to 1773 and held support before auctioning back to the previous multi-year high and going on to make a higher high. Following last week's pullback, on Friday the S&P auctioned back above the 1800 price level, and on Monday, the market rallied up at or near the previous multi-year high at 1812. Traders that employ market structure as the vehicle for their technical analysis pay particular attention to the similar prototypical patterns of market development that redundantly appear throughout the trading range. The most common pattern is the run-pause pattern that we see here when the S&P auctioned above the November 20th low and rallied up to the current multi-year high. After the market makes its initial up move, it is typical that a period of consolidation develops. The market will often retest the high and sometimes modestly extend the trading range. Similarly, the market will pull back to the point where initiated buying has occurred, and both the prior high and the initial pullback become key reference points. When the market breaks down below a minor support level, it will typically encounter resistance on the initial retracement. And similarly, when the market initially retests the previous multi-year high, probability favors price will pull back in search of support. Coming into today's session, we expected to see the S&P pull back at or near 1800, 1798. A trading strategy is like a plan wherein one has a specific goal with a defined objective. However, a strategy is not exactly a list of things to check off. When one is acting in a dynamic environment or dealing with a dynamic data series like a price series, it is often not possible to highlight an exact entry point. Therefore, the term at or near is used to describe the desired trade location. In the context of today's session, we expected to see the S&P pull back at or near 1800. During today's session, the S&P traded down to 1801, at or near the desired entry point. During the initial sell-off, the volume at price data indicated that there was statistical high volume or responsive buying executed at the low. Here we see 10,000 contracts, again another 10,000, 20,000 contracts. During the pullback at or near 1800, the order flow monitor indicated that the computerized sell programs were waning. Tracking order flow events is one of the key computational tools developed by Follow the Bots. When the S&P auctioned up initially at or near what was Monday's low at 1806, 1808, the order flow monitor detected that the computerized buy programs were waning. Similarly, during the initial retracement up to 1805, the order flow events also indicated buying interest was waning. During the open of the Globex session, the order flow events indicated that there was high-frequency buying interest or buy surges occurring when the S&P traded up to the 1805, 1806 price level. Today's sell-off from the initial retracement to the multi-year high completes our Bayesian inference that the S&P would likely pull back at or near 1800. The expectation is that the market will auction up and retest the multi-year high. However, the events that led up to the sell-off indicate that there is selling pressure at or near the 1808 price level, approximately Monday's low, and that the market will have to overcome that responsive selling. In the event that the previous sellers cover their short position, we would expect to see a retest of the 1812 high. Stops are likely located up at 1814, and the current maximum likelihood expectation price estimate remains at 1820. There is no guarantee that the market will trade above previous resistance, and or a breakout above 1812 will result in anything more than minor range extension. Therefore, we will be paying close attention to the order flow events that are associated with the retest of the multi-year high. If the S&P fails to auction back to the multi-year high and pulls back down again to retest today's low, the probability would increase that the S&P would breach support at 1800 and potentially pull down to 1796. That concludes our recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.